From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome now to Balance of Power. This is where the world of politics meets the world of business. I'm David Weston. President Biden has just delivered remarks on foreign policy to the Munich Security Conference. And later today, he's on his way out to Michigan. For a report on this busy day at the White House, we welcome now our chief Washington correspondent, Kevin Cirilli.
David, some remarkable developments from President Biden's remarks virtually to the Munich Security Conference. Three major points here that we should note. First and foremost is that President Biden, looking to convey a different geopolitical tone than President Trump, he said that the United States will, quote, keep the faith on Article 5, reminding folks that that means an attack on one is an attack on all as it relates to America's alliances with our Western allies. Secondly, he specifically drew a contrast recently in saying that the United States will not pull out troops from Germany. That was one of the final acts that the previous administration announced that they were doing. Many people interpreted that as a snub against German Chancellor Angela Merkel. That is no longer going to happen. And whether it's the official first day of the United States rejoining the Paris Climate Accords, or even Secretary of State Tony Blinken saying that the United States would meet with Tehran for the Iran nuclear disarmament talks, mind you, that Tehran has rebuffed. This is without question a new tone. But thirdly and finally, and this is important, while much of the analysis has been focused on the contrast with Trump, it's also a contrast with China. In his remarks to the Munich Security Conference, President Biden made clear that he is hoping that the United States can lead the world in helping folks choose democracy over autocracy. That should be really looked at through the lens of the Communist Party of China. Now, from here, President Biden will head to Michigan. He will continue to try to drum up support for his vaccination rollout plans, especially as he seeks to build support from the private sector, not just the private sector here in the United States, but also around the world.
Yeah, not just Michigan, Kevin, but Kalamazoo, Michigan, where Pfizer's making that vaccine. Thank you so much to our chief Washington correspondent. He is Kevin Cirilli. For more on President Biden's reset of both U.S. and foreign domestic policy, we welcome now Lonnie Chen. He's Hoover Institution Research Fellow and Policy Director of Mitt Romney's 2012 presidential campaign. Welcome back. Great to have you, Lonnie. First, start on the foreign affairs side. We did see these remarks, and it is quite a difference from what we had the last 4 years, isn't it?
Yeah, I mean, there are definitely some marked differences. I mean, certainly with respect to the direct engagement with NATO, what you're seeing in terms of moving against the Trump administration's plans, as Kevin noted, to withdraw troops. I mean, these are all significant changes. Substantively, I think tonally, David, though, even more importantly, what we saw was an effort to reinforce our European alliances in particular, which did come under pressure during the last 4 years. But one thing that is noteworthy is not much change in terms of our posture toward China. I think there was a big conversation about just how different this administration would be. Would it take a less confrontational tone? What is absolutely clear is that President Biden believes China is a major competitor, a potential adversary. And it is, I think, a useful thing to see that that policy has changed, maybe in a little bit from a tonal perspective, but substantively with respect to China, I think we're seeing much the same as we saw during the tail end of the Trump administration.
Well, it's interesting, I think, Lonnie, also that as President Biden was speaking to the Europeans, that may be the one area where the Europeans are not in total solidarity with President Biden. I'm not sure the Europeans are eager to be as tough on China as maybe President Biden is.
Yeah, I don't think they are. And here, I think President Biden's going to have to lean heavily on our traditional Indo-Pacific allies. The Republic of Korea, Japan, Australia has been a major player in our efforts to call out situations where the Chinese Communist Party has not acted in good faith. So I do think you're going to have to see a turn toward into the Indo-Pacific, toward engagement in the Indo-Pacific, engagement in Southeast Asia, where China's predatory behavior has been particularly problematic. So I do think you're going to see much more engagement with that part of the world to address the China challenge.
So let's turn domestically here, because that is something that President Biden certainly is putting a lot of emphasis on. Next week looks like it's stimulus week, if we can call it that, because they're really trying to get that bill through Congress by Friday. What are the chances?
Well, they're going to go for it on a party line vote. They're going to do the best they can to move it through via the budget reconciliation process in the Senate, which, of course, is a fast track process relating to items that have a relationship to revenue or to spending. And they're going to try and pass many of their priorities in that $1.9 trillion stimulus package next week. It really depends on if they can hold the entirety of the Democratic caucus. Joe Manchin of West Virginia, which is, he's going to be the crucial swing vote, as he will be many times in the Senate looking forward. It really is a question of whether they can keep people like Manchin, Kyrsten Sinema of Arizona, as well as another swing vote, John Tester of Montana. If they can keep these senators in the fold, they'll be able to do Biden, and the Democrats will be able to do whatever they want.
Are they going to keep them in the fold on the question of $15 minimum wage?
That's going to be a tough one. And by the way, we're not even sure that's going to survive the reconciliation process because, the Senate parliamentarian has a huge role to play here, this sort of a little known technocrat who has to determine whether something is appropriate for the reconciliation process or not. And the minimum wage increase may not, in fact, make it through. But if it does make it through, it is going to be a highly controversial matter, not just with Joe Manchin, but with a few other moderate Democrats as well.
So, Lonnie, you're known as a policy guy. Give us a sense of if they do get some version of this $1.9 trillion, even if it's 1.7 or 1.6 through, what's it going to do to the economy? And most specifically, what's it going to do to jobs? Because that's a big hole left in this economy. We see a lot of things coming back, but we got almost 10 million people who don't have jobs who used to.
Yeah, I mean, there's no question that we've still got some way to go in the labor markets. I'll just say this. We did, somewhere around $4 trillion of stimulus last year. And the question now is, how big is the output gap? What are we trying to fill? And $1.9 trillion, in my opinion, is way too large of a weapon to be wielding, given the output gap, the difference between what our economy is producing and what it potentially could be producing, even given the slack in the labor market. So to me, $1.9 trillion is way overshooting the target here. I think we should be looking at a far more targeted package, one that focuses on the problems you've noted, people who remain outside the labor market, those who are still having difficulty, particularly accessing the things they need because of COVID directly, whether it's PPE or testing or vaccine distribution. Those really are the areas we should be focusing our attention. One specific example, the $1.9 trillion package has $350 billion in state and local aid. I'm not sure, given what we know about state and local revenues where they are, if that's really necessary. So I think there are some ways they can pare down this package. Whether they actually do it or not, I think that's an open question.
So we've had Larry Summers on more than once talk about that output gap, and he would agree with you. They're overshooting that. What's the biggest downside besides just spending money maybe we didn't need to spend? What could be the harm?
Well, it does place sort of long-term fiscal pressure on our balance sheet. It does create a challenge down the road in terms of how you're going to address the debt implications. Are we talking about tax increases further down the road or not even that far down the road? And then the other piece of this is, are we going to start to see some inflationary pressure? So I do think that there are reasons to be very worried, even if right now at this moment in time, it may not be a concern that we're staring in the face. It will be a concern that we're looking at in the not too distant future.
Okay, thank you so much. As I say, always great to have you with us, Lonnie. That's Lonnie Chen of the Hoover Institution. And now it's a time for a check on the markets from Abigail Doolittle. So, Abigail, stocks are doing pretty well, but I'm really paying attention to that 10-year yield.
The 10-year yield, yes, well above 1.3% at 1.33%, I believe, 1.35%, which you were talking about earlier today. It has climbed there. And the important thing that we're learning relative to stocks, David, is yesterday, of course, in the last couple of days, because this is the first update for the S&P 500 in 4 days, is that investors are now tolerating above 1.3%, because we had a few days there where rising rates were rattling stocks. But today we have yields backing up once again. So it tells us that investors today are taking more of a reflationary tone around this as opposed to inflationary. We have that Russell 2000 on fire, up 2.5%. It's best day in about 2 weeks. This, of course, after a really rough couple of days and lots of underperformance for small cap. We also have the banks higher, energy higher, industrials. It has everything to do with the anticipation of a reopening, vaccine optimism, and again, the idea that this healthy, that rates rising, it's healthy, it's reflationary, but not inflationary. A very fine line. And the big question will be, what level will we hit next where it will cause some more volatility? 1.4%, 1.5%. We don't know, but it's likely HUD, David.
Yeah, it's fascinating to watch. Thank you so much to Abigail Doodle for that report on the markets. Coming up here, we're going to talk with the ranking member of the House Financial Services Committee, Congressman Patrick McHenry of North Carolina, about what he learned at those GameStop hearings yesterday. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. The House Financial Services Committee held a hearing for over 5 hours yesterday, and one of those asking the questions was the ranking member. He is Congressman Patrick McHenry of North Carolina.
Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements, not to help hedge funds. We don't answer to hedge funds. We serve the millions of small investors who use our platform every day to invest.
Okay, for those of you confused, that was actually not Congressman McHenry. He was answering a question from Congressman McHenry. That was, in fact, Vlad Tenev, who is the founder of Robinhood. We now welcome a Republican congressman from North Carolina. He is Patrick McHenry. So thank you for being with us, Congressman. The basic question is, did you learn anything yesterday?
Sadly, no. I called for the hearing so that we could understand what happened on the GameStop trade and how new apps and zero commission trading has shifted the market in favor of the retail investor. That's the reason why I called the hearing. But after 5 hours, I don't think we learned anything new. I think the panel was limited in terms of what we could find out. And there are still key questions left unanswered after that very long hearing yesterday.
I understand this is not the only hearing you're going to have. Didn't I read there's going to be 2 more?
Well, that's what I heard as well. That was news to me today. Look, the key part here is missing is the question of clearing, of regulation. What do the regulators know, and was this as dramatic an act as has been portrayed? And I think there's some questions that still remain.
Yeah, well, let's talk about clearing. That T+2, basically you have to settle the trade within 2 days. We heard some people say maybe it should be T+1. I think actually the Vlad Tenev said it should be T+0. They should just do it immediately. Did you get a sense of whether that's doable or whether that's a good idea?
No, I think that is in particular the hearing we should have. Which is the nature of clearing and how much capital does it take to have this slower settlement process that could be technology enabled, could be instantaneous. But what are the relative trade-offs? Are there other systemic risks if we have immediate clearing, or do we lessen the systemic risk with the change?
I'm also curious about that exchange you were having with Vlad Tenev, whether you got a satisfactory answer to why he was so surprised. Because one of the issues was he apparently got a call, at 4 in the morning or something, and said, by the way, you have to have an awful lot of money to post right away. And he basically didn't have it. Did you get an answer of why he was so surprised?
No, I think the follow-up question to my question came much later in the hearing by my colleague Anthony Gonzalez of Ohio, who pushed on this. I mean, how do your customers know that you have enough capital and liquidity available to ensure that they can use your application? You can serve as a broker-dealer even in moments of market stress. I think that is something that we need to get to the bottom of. The fact that Robinhood raised a significant amount of capital afterwards tells me that they needed more capital to do the fullness of the trading, the value at risk that they have on their trading platform, and to conform with even the most volatile of market moments or days.
Congressman, there's a lot of talk about pay for flow, basically, which enables, as Mr. Tenev kept saying, that enables us to avoid charging anything at all to people who are trading on our platform. At the same time, I thought that some of your colleagues were pressing on, wait a second, there's no such thing as a free lunch. What gives in that? There has to be some way to pay for that, and doesn't it affect the way you actually do the trading?
Sure. I mean, I think we need to understand, if policymakers need to understand the relative trade-offs, and retail investors need to understand the relative trade-offs. Paying for commission is still something available in the marketplace, far less available than a few years ago. And in fact, over the last 50 years, we've crashed the price of trading and investing, which is a great thing for retail investors. But there is a trade-off. But for most retail investors, this type of application and payment for order flow is a better deal for them. But some investors, old-fashioned commissions may be better for them. The fact is, as a policymaker, what I want is choice in the marketplace, competition in the marketplace, and for the consumer to have enough disclosure to make a decision for themselves, not for policymakers to decide it out of Washington.
Congressman, give me some sense of the process here, if you can. You sit up there on Capitol Hill. You're one of the decision makers. You represent the people who have questions. Why does it make sense to have these hearings now rather than wait till the SEC does their investigations? They have subpoena power. They're gathering information. Can you really learn something at this early stage in the process, or does the Congress benefit actually from the SEC doing its investigation?
Well, we got over 700 pages of documents from Robinhood before the hearing yesterday. There's a significant amount of disclosure that is sped up through us having hearings on Capitol Hill. The question of policymakers being informed enough to ask an informed question, that is something the public can decide for themselves about how they elect their representatives and whether or not they take them seriously. Some questions were really spot on, very sharp, very informed, others less so. But the fact of the matter is the majority, the chair of the committee, gets to determine the time and the manner of these hearings. And the panel was limited, not of my choosing. And the limited nature of the panel led to us not being able to answer some of the bigger questions out of the day. For me, there's still the broader narrative question, which is the retail investors want more access to markets, want more equity available to them, and we have fewer options in the marketplace. We need to open up those regulatory barriers, in my view, open up those regulatory barriers so people can invest in new and different products.
One of the questions you asked was about the private nature of Robinhood and whether it was public. I assume that Mr. Tenev would like to go public if he could. Would that be a good thing?
Well, look, my question about the availability of their shares to their platform users. I understand they're a private company. I understand regulation around accredited investors. My point here is if they truly want to democratize finance, they should allow and they should push for an opening through regulation changes, the use of equity, the availability of equity for the people that have made them successful. So if you're Uber, think about the Uber driver, the first Uber driver. Why didn't they get the upsale, the opportunity to own Uber? Well, because of regulation. The accredited investor standard by the Securities Exchange Commission assumes that if you don't have $1 million of net worth in the bank, you're dumb. And so I think that is a dumb regulation. That's the reason why I highlighted that question of why Robinhood doesn't open up ownership to those on their app. And I think this is something we should remedy. We should open the availability up. And I think that will reduce inequality and grant average folks real opportunity for upside potential in a growing economy and a growing tech sector.
Democratization of the economy, of the markets, of capitalism itself sounds like a good thing if you just say it that way. At the same time, do we need to have some guardrails for some of the retail investors who may not be as sophisticated as some of the people on Wall Street are, and frankly may not have the same level of disclosures as was brought out by some of your colleagues yesterday?
Sure, and I think buyer beware, for sure. We don't know how these trades end. We don't know how these investments end, and no one should invest money that they can't afford to lose. I believe that fully. But I also believe that individuals should be trusted with their own money, with their own decision-making, with their own capacity to decide for themselves. We need to make sure as a government that there are proper disclosures so that people can make a decision for themselves in an informed manner. And so I think rather than driving disclosures, we're lifting the ladder up, if you will, from average everyday investors to actually build wealth and grow with ownership of equity in a growing marketplace. So I think there's a balance here, and we've tipped the balance well against the retail investor and well against the really major growth opportunities that are in the private markets.
I understand you're ranking member. You're not chair at this point. But as ranking member, what would you like to be the upshot of this hearing to be? Is it a report? Is there a call for action? Is it draft legislation? What do you think the product should be? As we look and say, okay, you had that hearing, now what happens?
Well, this is a bullet point to a larger value. This is a happening. This is a circumstance that is but a bullet point in this larger narrative. The larger narrative is that retail investors want more opportunities. They want more ways to invest, They want more choices in the marketplace. So I want to get into the overarching nature of this discussion and get into the broader narrative piece, right? About how we have to change our capital market structures to make it more equitable, to be able to give the average American equity in our growing economy. And I think that can be a great leveler for income inequality. I think that can drive financial inclusion. And I think we should open up markets so that we can drive that inclusion. So I think there's a broader narrative piece that we need to understand, and that's what I'm trying to do as a policymaker.
Congressman, always appreciate you spending time with us. That's Representative Patrick McHenry. He's Republican of North Carolina. And a programming note now, tune into Wall Street Week featuring former Treasury Secretary Larry Summers, Harvard Professor of Economics Ken Rogoff, and Quadratic Capital Management CIO Nancy Davis. That's coming up tonight at 6 p.m. Eastern Time. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Deere is our stock of the hour, up nicely today on the strength of an improving farm economy. And Abigail Doolittle is here with the story. Abigail?
David, it's really pretty impressive. This stock is up about 10% on the day. Its best day since March of last year. On the rebound out of those March lows, that's the degree of the buying power. And it has everything to do with this very strong fiscal first quarter that they put up. They beat right across the board. They put up revenues of greater than $8 billion. They also put up adjusted earnings of almost $3 per share. So very, very strong, plus big beats also relative to various segments. Now, what makes it so interesting, a lot of the strength, and the street's extremely happy with this quarter. The stock is now at a record high. Many analysts saying that this is one of the best quarters ever. The outlook is also strong. It has to do with farming strength. And what makes this so interesting is it ties back to the Federal Reserve, because, of course, we have this big rally for commodities, including the grains, wheat, corn, so on and so forth. And because of this, there's a possibility that you have farmers feeling very optimistic, very confident, so they're buying more equipment. However, because that inflation, that asset inflation could be temporary, it could make for an awkward moment in the future. We don't know that that's going to happen, but it's just a nuance when you have these temporary liquidity situations. Will it last or will it not, David?
Okay, thank you so much to Abigail Doolittle for that report on our stock of the hour, which is Deere. Coming up here, President Trump is looking to reintroduce the United States to the world with a new focus on foreign policy. We're going to talk about his message before the G7 and the Munich Security Conference just today. That's coming up on Balance of Power, and we are on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. The blackouts that plunged Texas into chaos in the midst of an historic cold blast are easing, but the energy crisis that outages sparked aren't over. 4 of the largest refineries in Texas suffered widespread damage from the freeze, and they could be down for weeks of repairs. President Biden's urging U.S. allies to uphold democracy and shun autocracy. Plus, U.S. foreign policy is ditching Donald Trump's America First approach. Here's the president in a virtual address to the Munich Security Conference.
We are in the midst of a fundamental debate about the future and direction of our world. We're at an inflection point. Between those who argue that given all the challenges we face, from the 4th Industrial Revolution to the global pandemic, that autocracy is the best way forward, they argue. And those who understand that democracy is essential to meeting these challenges.
Earlier, German Chancellor Angela Merkel said that the change of government in the United States is strengthening multilateralism. The chancellor added that the first decisions of the Biden administration already show that. The United States is expected to leave Germans out of any sanctions over the Nord Stream gas pipeline from Russia. The Biden administration is trying to stop the project without antagonizing a close European ally. A key report to Congress could be out as soon as today. Bloomberg's learned it's expected to list only a small number of Russian-linked entities. Iran says the U.S. must first return to the 2015 nuclear deal and lift sanctions if it wants to start talks with the Islamic Republic. That appears to be a rejection of an effort by the Biden administration to begin direct discussions before rejoining the accord. President Trump withdrew from the agreement in 2018 and reimposed sanctions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. David?
Thank you so much, Mark. President Biden appeared at two international conferences today, the G7 and the Munich Security Conference. And he used the opportunity to begin to redirect U.S. foreign policy, moving away from his predecessor's America First approach. We welcome now Samantha Carl Yoder. She's former Chief of Staff to the Undersecretary for Political Affairs at the State Department, and now she is Policy Director at Brownstein Hyatt Farber Schreck. So welcome. Great to have you with us. Give us your take on what we heard today. It did sound like it was a very different tone, at least a lot of talk about working with allies, particularly in NATO.
Thank you. Thank you very much for having me. You're right. Fundamentally, there is a shift in the way that foreign policy will be done under the Biden administration. The president was very clear in his comments earlier today that the U.S. is returned, that we are shifting away from President Trump's America First policy. And President Biden has successfully reaffirmed to the world, and his staff is doing the same at all levels, that there is a return to multilateralism, that the United States wants to engage with allies and partners, that it wants to work with our allies to address the issues that are facing the world, whether that issue is COVID, whether that issue is climate change, whether that issue is dealing with China writ large. And so I think that's one of the most fundamental shifts that you have seen in the foreign policy. I think certainly today the president was very clear about the emphasis he is placing on climate. Today, of course, the United States re-entered into the Paris Accord, which is a great step for the United States. But it's a great step for the world because no one in the past 4 years has stepped into that global leadership role on climate. And I think that President Biden, with John Kerry and with the team that they've amassed, are very well placed to help to move the energy transition forward and to start addressing the climate issues that affect the rest of the world.
Samantha, you mentioned two particular areas that the Europeans, I think, will be very enthusiastic to hear about, and those are dealing with the pandemic. President Biden pledged, I believe it was $2 billion for COVAX to really develop vaccines around the world, as well as saying that we're back in the Paris Accord, as you said, and we really he applauded the Europeans for keeping it going. But what about some areas where maybe we aren't seeing eye to eye quite as much? And I want to talk about China, because President Biden made it clear he's not going to go soft on China at all. I wonder whether the Europeans are going to be as eager as he is to really stand up to China.
That's an excellent question. I think the Europeans are taking a pragmatic approach. I think they want to see where the United States is going to come out on China. Certainly the Biden administration and his phenomenal team led by Kurt Campbell and Tony Blinken are looking at the existing policies that are in place for China. They are looking at what China has done. And I think there's a realization that some of the policies will continue to go forward, but at the same time, they're looking for ways to engage with the Chinese as well. It will not be as antagonistic as it was in the past, but certainly the Biden administration is not going to go in and say, let's lift sanctions and return back to status quo ante. A lot has happened over the past 4 years. There's a recognition that things in the United States have changed, but the way that China does business has also changed. And so allowing the administration the time to do that thorough review and to talk with allies and partners about how to address these issues together. They don't affect just the United States, and I think that's clear. China and what China is doing affects the rest of the world. And so I think the Biden folks are absolutely accurate by saying that they should be talking with the Europeans and others about what those next steps are. There may be disagreements, but that's part of the diplomacy and that's part of the negotiation and the engagement.
Another area that President Biden addressed in his two sets of remarks today was Russia. And I don't want to exaggerate, but I think I probably heard as much tough talk towards Russia in those two addresses today as I did in 4 years under President Trump. How are the Europeans going to react to that? Because the Europeans, to some extent, get caught in between.
No, I think that's right. I mean, I think certainly the president was very clear that they're not going to stand for Russia's efforts to undermine democracy, whether it be in the United States or whether it be elsewhere around the globe. The president will be talking, will be engaging with allies, Germany, others, to really figure out the best way to deal with Russia. And I think you're right. The Europeans are always put into a slightly different place. They're a little bit in the middle because of A, their proximity, and B, the economic relationship that exists between Europe and Russia. But certainly we've been able to work together with the Europeans in the past on Russia issues. The United States will have some policies that they will enact that will be U.S.-specific policies. But at the same time, the most important issues is that Tony Blinken and his colleagues will be engaging with the Europeans so that whatever the United States does will not be taken either A, out of context, or B, without folks knowing. I think that's really important as we work forward on these relationships.
Let's turn to one other that certainly involves the Europeans, and that is Iran. We know that President Biden has said that he'd be willing to accept an invitation actually from Europe to sit down with Iran and the other people who are part of the JCPOA. At the same time, I believe that Iran has basically rebuffed him. How much success is he really expecting to have with Iran? Can we get back to the table and make progress there?
So getting back to JCPOA, going back to status quo ante, is not likely to happen. And they know this. The team that is working on the Iran issues, led by Rob Malley and others, are experts at this. They recognize that you have to begin the conversation. And I think what's important is that they have begun the conversation. They've made an offer to the Iranians. The Iranians have pushed back. But now the floor is open for them to actually engage and start those conversations, whether they be back channel, whether they be direct, whether it be a mix. And this is a fundamental change from where you were, over the past 4 years. And I think, the Europeans willing to work with the United States to bring Iran back to the table is fundamental. And I think the United States is going to continue to reach out to Russia and to China in order to get the P5+1 back to where they were in the past. There are issues with Iran they're going to have to deal with. And I think there's a recognition that this is a sort of a new period of that relationship with Iran. You can't go back to the original deal, but what are some of the elements that you can advance moving forward while addressing some of the other issues that are on the table?
Samantha, that was really helpful.
Great first step.
Thank you so much. It was really, truly helpful. That was Samantha Carl Yoder. She's policy director at Brownstein Hyatt Farber Schreck. And we have some breaking news right now. The state of Texas has called off the energy emergency, saying that the grid is back to normal. They had said earlier in the day they thought it might happen today, so the grid may be back to normal. I dare say there are going to be a lot of people's lives that are going to take longer to get back to normal down in Texas. But good news, finally, for those Texans who've been without power for so long. And in the meantime, we're going to turn to the question of Texas, but also infrastructure and how they're interrelated with Henry Cisneros. He's former HUD Secretary, former mayor of San Antonio, Texas. This is Bloomberg Balance of Power. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Infrastructure was very much on the agenda in Washington even before the Texas energy crisis we saw play out this week. Henry Cisneros served for 4 terms as mayor of San Antonio and went on to be Secretary of Housing and Urban Development under President Clinton. He has now teamed with the Kinder Institute of Urban Research at Rice University to develop a comprehensive plan that takes a somewhat different approach to what we need in infrastructure. We welcome Secretary Cisneros, now chairman of American III Partners, back to Bloomberg. So, Mr. Secretary, thank you for being here. Before we go to your plan, which I really want to go through, I want to start with Texas. We just heard they lifted the emergency on the power grid down there. As I say, you know Texas. You were mayor for a good long time in San Antonio. Give us a sense of what's going on down there.
Well, first of all, this has gone far beyond inconvenience or discomfort. This is a genuine crisis for people. And it underscores the interrelated, interdependent nature of the complex society we have built, where infrastructure matters are not things to be taken for granted. They are the underpinnings of how our society works. And many of our objectives for the society are impacted. This Texas case is the perfect example. Here you have, follow the ripple here. You start with water pipes at fossil fuel plants and turbines and wind stations that result in inadequate power. Therefore, the system needs to deploy power around the state, move power. In the process, they cut off water pumping stations because they need electricity to operate. So now people are without not only power, but water. And water pressure drops, so contaminants enter the water supply. That's the reality of what hundreds of thousands of Texans have faced this week. give you an example of a very precise life or death aspect of it. This morning, I saw a report that dialysis centers are not able to operate, not able to open, because they have neither the water they need or the power that they need to operate. So people are now on their 5th day. We're supposed to go 3 times a week without dialysis. So this, as I say, goes far beyond inconvenience or discomfort. We're talking about life or death matters dependent upon this sensitive thing we call infrastructure, which we don't pay attention to except when we have a crisis.
Well, let's talk about infrastructure, because as I said, you have this report. I found it a fascinating report based on a survey that you'd done some time ago where you came up with a lot of different individual projects around the country. And you basically take all those and you evaluate them on a bottom-up approach, asking individual communities, what do you need, rather than a top-down, this is what we can give you. Tell us how you went about this.
Well, the idea is something that I've been nurturing for a long time. I was frustrated with the top-down aspect of the infrastructure discussion in our country. So it's really built around the silos that are the cabinet departments and the silos that are the congressional committees. So you have EPA doing water and the Corps of Engineers doing levees and ports, and you have the Federal Highway Administration doing highways and the Rail Administration doing rail, and you have HUD doing housing and airports at the FAA, but never the twain shall meet, either in Washington or at the local level where they actually integrate and have to work together to create strong and viable communities. So we wanted to just demonstrate that localities have priorities, and if we use that as the template, as the focus for how we do infrastructure, the country does a lot better. We surveyed the 100 largest cities as a sample and the 100 largest metros, which are not quite the same, and they prioritized 1,807 projects. This was in October and November. And from that, you begin to see patterns, interesting patterns, like the fact that transportation is as important as it is. It's still the #1 source of infrastructure commitments. Secondly, a whole lot of public facilities, especially after the pandemic, county hospital systems, clinics, broadband, mass transit to get essential workers to work, rose in priority because of the pandemic. That's very important for the country, for our national decision makers to know. Water systems. In the West, water systems means responding to drought and therefore water supplies, new water supplies. In the East, it is responding to climate issues like rising sea levels in Miami and Norfolk and New York City, or violent storms that impact water control and floods. So when you work up from the bottom, you get a different picture for the country than the traditional top-down, siloed priorities that are fashionable or trendy coming out of Washington.
In addition to the categories you just mentioned, energy is one of the categories you have, and I think maybe half of them go to renewable sources of energy. Match that up, if you can, with what's gone on in Texas. I mean, if we invested that money in infrastructure, would it have made a difference in Texas?
Oh, I think it would have made a difference in Texas. We would have had more reserves, for one thing, and so there would be backup power systems, backup supplies. Some of the Texas problem is also the fact that unfortunately, people have lobbied for minimal standards in construction, and that meant not putting pipes that in the north would be insulated, but nobody ever planned for a weather aberrational effect like this, so they didn't put in the proper insulation in piping. We have to plan for these kinds of eventualities. Weather systems are changing enough in the country that these are not going to be aberrations. They're going to be regular climate events. I've seen some analysis this week that shows how the jet stream has altered. More Arctic air will be coming into the mainland United States in the years to come. So things that were not expected are likely to happen and should be planned for in an infrastructure sense. That is in effect, the definition of infrastructure, to have the underpinnings, the undergirdings of the society ready for whatever happens.
So, Mr. Secretary, you put your finger on something I find really fascinating, maybe difficult. You've operated, obviously, at the local level as mayor of San Antonio and at the federal level as the secretary of HUD. What is the right balance there? Because if you appropriate all the money you needed for these 1,800 plus projects, I suspect you're not just going to give block grants. Because, for example, in Texas, you just mentioned, if they've given a lot of money, they might not have winterized their pipes. And so it wouldn't have got it done. How do you have the right balance between what the local community really needs and how they see it? Because they're on the ground, they understand it, but also have some federal control that makes sure the money is going for the right purpose.
Well, I think as you say, it is a balance, and it involves Washington consulting and asking. We need to set up some consultative mechanisms. This survey was a demonstration to show that in a 2-month period, 5 people can survey the country, the 100 largest metros, and get data. If Washington had an inter-cabinet entity that could set up a war room and find out what do they need at the local level, that would be an important first step. There's also a lot of other mechanisms, intermediary mechanisms. We have extensive system of what's called MPOs for planning transportation across the country. That exists. We have councils of government that bring governments together and can advise on priorities from the local level up. So it doesn't have to be time consuming. It doesn't have to be an impediment to efficiency, but consultation is very important. As you say, the pipelines exist from Washington. We have to respect that, but a meeting somewhere that recognizes the priorities at the local level are probably the right priorities. That is to say, who knows better at the local level? Who knows better in Los Angeles that they need to invest in the Port of LA, the Alameda Corridor, the congested roadways, the rail, than the people there.
It just makes good sense. As I said, a fascinating report. Thank you so much for being with us. It's Henry Cisneros, former HUD Secretary and former San Antonio Mayor. Coming up, former Treasury Secretary Larry Summers says we may have higher interest rates sooner than we think. That's next on Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Fed keeps reassuring markets that it's not even going to think about raising interest rates anytime soon. But former Treasury Secretary and Wall Street Week contributor Larry Summers says it may have to move sooner than markets expect.
You know, I find it ironic and pathetic that the progressive wing of the Democratic Party, people like Senator Warren and Senator Sanders, are all excited to give $50,000 or more of debt relief to young people who are working at Wall Street investment banks making 6-digit sums of money, rather than focusing on the needs of the high school dropouts, the needs of those who are graduating from high school but not going on to college and need specific training. And so I hope that progressives will disconnect from the elite concerns of Ivy League college graduates, of those with graduate degrees, and focus on the people they should be representing, the people who have been left behind.
So let's wrap up the week here with a quick round of Summer Says. Let's start with the Texas energy crisis. We've all been watching it. It's been awful what's happened to those people down there. Do you think that crisis will speed up or slow down President Biden's quest for green energy?
Not much either way. Maybe it'll encourage some more renewable investment. On the other hand, solar power wouldn't have been working that well in Texas this month.
When do you think the Fed will raise interest rates?
Sooner than they think and sooner than the market thinks. I'd expect rate hikes to be well underway by the end of 2022.
Will its hands be forced essentially by inflation?
I think a combination of inflation and perhaps an overheating economy and fiscal policy on fire, particularly if we actually build back better. And look, returning to more normal interest rates could be okay, but it's going to be a very challenging transition. And I must say, it doesn't seem to me from the Fed's comments, which are all on the side of resisting deflation, all on the side of promoting social equality. I think the Fed is not recognizing the era that they're headed into, where they're going to face the kinds of challenges that the Fed faced in the 1970s. The Fed failed in the 1970s. And I think if the Fed wants to not fail, they're going to have to start recognizing the reality of those challenges. And that's going to mean a significant change in their tone.
And finally, Larry, we've talked more than once about the great and growing issue of income inequality in this country. Give us a projection. 1 year from today, will it be better or worse than it is right now?
Probably better because of all the transfers that are being made to those with lower incomes, things like the unemployment insurance payments that are so generous. But whether it will be sustainably better, whether a foundation for real progress will have been laid, I think that's less clear.
That was part of my conversation with former Treasury Secretary Larry Summers. Catch the full conversation at 6 p.m. tonight Eastern Time, plus conversations with Harvard Professor of Economics Ken Rogoff and Quadratic Capital Management CIO Nancy Davis. This is Bloomberg.